Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to answer the question, what is a MYGA annuity? Okay, so MYGA annuity, it stands for Multi-Year Guaranteed Annuity. It's the annuity version of a CD. It looks like a CD, it acts like a CD, it smells like a CD. I mean, it's almost identical to a CD with just a few differences. Okay, so when you go to a bank or credit union, you buy a CD, you basically pay. The CD is a long-term, relatively long-term savings vehicle. You use it to get a fixed interest rate to grow your savings for a fixed period of time. After that fixed period is up, then you either cash in the money or you move it to another CD, right? Same thing with a MYGA, right? The difference between the two in terms of terms is usually with a CD, you're going to get anywhere from like 3 months in length all the way up to maybe 5 years in length. With a MYGA, it usually is a 2-year length to a 20-year length. So you can pick and choose the different terms: 2-year, 3-year, 4-year, 5-year, 6-year, 7-year, etc. Okay. The interest on a CD is taxable. With a MYGA, it's tax deferred. Okay. And then there's some other differences between a MYGA and a CD is with a MYGA, typically you're going to have annual penalty-free withdrawals. So you could pull money from the account as it's growing throughout the term if you wanted to. Most CDs, you cannot do that. All right. So yeah, basically a MYGA, you pick out your term, like I said, 2-year, 3-year, 4-year, all the way up to 20 years in length. You're going to get a fixed interest rate for that term. Your money's going to grow at that fixed interest rate each and every year for that term. It won't go higher. It won't go lower. It is fixed and cemented in for that term. And then when the term's up, you're going to have 3 choices. Choice number 1, you stay in the same MYGA and it renews at a different rate. You cash it in, or you transfer it to another MYGA product, okay, or a different annuity product. So that's how a MYGA works. It's very vanilla. It's very to the point. If you die, whatever's left in the account will go down to your beneficiaries in a lump sum. Interest rates are higher with MYGAs than CDs. Right now, here in 2026, we're at the highest fixed interest rate environment for MYGAs since the 1990s. So now's an awesome time to be buying an annuity, a MYGA specifically if you're considering buying a CD at a bank or a credit union. And the things that you got to watch out for with MYGAs, and it's important that you use an independent annuity broker because they're going to protect you from buying a crappy product. A lot of MYGAs have, I coined this term, gotchas. Gotchas are hidden negatives built into a MYGA contract. Okay. So for example, you may look at MYGAs at first and start shopping the interest rates, and you might see the highest interest rate, but it has no liquidity. So you're stuck in that contract without being able to touch any of that money for the fixed term, right? Another gotcha is some annuities with the highest interest rates will say, hey, if you die before the fixed term is up, we're going to apply a surrender charge to your beneficiaries. Usually MYGAs give you the full account value, waive surrender charges, and give that to your beneficiaries in a lump sum. So there are things like that you have to be aware of. Another thing that you have to be aware of with MYGA annuities is there's a lot of small companies coming out of the woodwork to get into the MYGA game because of the high interest rate environment. I would tread lightly on the companies that you use. There are companies out there now that are offering the highest fixed interest rate, and they've got 13 employees. So if you're thinking about buying a MYGA for several $100,000, you got to ask yourself, is it safe for me to put all this money in the hands of a company that's been out for a handful of years and has less than 100 employees. And of those 100 employees, 6 of them are semi-financial professionals, right? So you got to be careful with that. You're going to want to, when you're looking for a MYGA, you're going to want to look for an A- or better rated company. Okay. If you insist on getting a B-rated company, my recommendations are to split the money up among several different insurance companies to mitigate more risk for your money, because every state has what's called a state guarantee association. They each have their own limits. It's their version of the FDIC. Basically, if an insurance company goes out of business, there's some sort of protections there to fulfill the contractual obligations the insurance can't fulfill because they mismanaged their company. And the SGA steps in and helps you out. But I wouldn't roll the dice on that, right? Because like anything that's doing that, it's a pain in the butt, right? And there's hurdles to jump through. It may take a long time to get your money back, So stick with an A- or better rated company, number one. Number two, you're going to look for what your liquidity offers are. Number three, you're going to look at what the death benefit is. It should be 100% of the account value in a lump sum. And then I think if you just stick with that, you should be good to go. If you come over to our website, the Annuity Expert, we update our fixed annuity rates each and every day by a human being. And you could see what the interest rates are. You can even see here, if in our table, if there's any annual liquidity available. So like none here, as you can see, these are all like American Gulf, super tiny company. Wichita National, super tiny company. Sentinel Security, they might go out of business this year. Same with their sister company, Atlantic Coast Life. Farmers Life here, tiny company. All B-rated companies, right? It's the B-rated companies that offer the highest interest rates because they're trying to buy business. They're trying to get capital to grow their company. And one of the reasons they have B ratings is because they don't have enough capital to run a successful business. So they buy your business by offering higher interest rates. So you can go here, you can see how long they've been around, annual liquidity, if they have any annual liquidity, what the term is, what the rate is up to. Now, this is important. The rate up to, every state is different with their annuities. So if we look at like American Gulf, if they want to sell in a certain state, they have to have a state version of that MYGA, right? So the Georgia's version, we're here in Atlanta, Georgia's version of the anchor MYGA may be different from the version in Florida or California, right? Because they run by state laws. What else should you know? I mean, I think the best thing if you're going to go into the MYGA world is, and I know this is a biased statement, but using an independent annuity broker is the best place to look for a MYGA, because we know what to look for in terms of gotchas. The service to you is free because the insurance companies pay us. We don't touch any of your money. We just facilitate the sale. And then we're just able to find you the best option for the scenario that you give to us, right? And we usually give you a couple of different options. And here at the Annuity Expert, we have the largest selection of annuity products in the United States. So you're going to be better off using an independent annuity broker than going to a bank or a credit union or using a financial advisor. They are all limited on what they can provide to you. So expand your horizons on your products and use an annuity expert like the Annuity Expert. If you got any questions about this, leave a comment below. I'll answer it over the next couple of days. Like, subscribe, catch you on the next video. See you.